Hi members, and welcome to another Macro Monday. My name is Mitchell Snedden and I'm joined of course by Callum Pickering. Now Callum, today we've got Scott Morrison fronting up to give a speech about housing affordability. It's something that affects us all here in Australia. I know you're looking for a house. I can't afford a house. What are we expecting to hear Mr. Morrison say? And also, why do we have this housing affordability crisis and what can be done?
So the Treasurer is giving a speech today directed at the states, addressing housing supply and planning regulation issues. Basically, he's urging the states to reduce some of the red tape that has made the housing supply process a lot longer than it should be. Now, we know that housing supply issues are fairly important for housing affordability. They're one of the major reasons why house prices in Australia are as high as they are, certainly compared with other countries across the world. Now, I find Scott Morrison's position a little bit unusual, given that he seems to be for housing affordability, and yet he argued so passionately against the reforms to negative gearing and the capital gains tax discount. Any solution to our housing affordability crisis has to look at both sides, demand and supply. And until we do that, we're probably not going to make much progress towards enabling the likes of you and I to buy a house.
I'm sure that's the only thing standing in my way. Now, sticking at home here as well, we've got inflation figures coming out on Wednesday from the ABS. What are you expecting to see?
Well, the market's currently expecting both headline and core inflation to come in at around 0.4%. Now, that's still fairly weak by historical standards. It indicates that inflation continues to track below the Reserve Bank's target band of 2 to 3%, and it indicates that it will likely remain that way for some time to come.
And finally, on Friday, we've got US GDP figures coming out. What are we expecting to see, and what are the likely ramifications on our market come Monday morning?
Market expectations are for a quarterly result of around 0.6. Personally, I'm a little bit more bearish than that. I think we're looking at a result of around 0.5% based on some of the data that has been incoming in recent months. The market implications are pretty important because a lot is riding on this result. First and foremost, whether the Federal Reserve decides to hike interest rates before the end of the year. Now, a weaker than expected result could certainly put some pressure on the Federal Reserve, particularly given that annual growth in the US is currently tracking at only 1.2%, which is much lower than you would traditionally see when you're looking at hiking interest rates.
And so the outcome on our market, if it is lower than we are expecting?
Well, if it is lower than expected, you would expect the market to be somewhat weaker come Monday morning.
Significantly or just marginally?
Depends on how far the result diverges from expectations.
Excellent. Well, Callum, thanks for joining us. And members, thank you. We'll catch you on another Macro Monday.